Welcome to our fourth podcast for 2011. This month we travel to Queensland, where David and Campbell will provide an insight into the commercial market in Queensland. So I trust you'll enjoy the presentation. Thank you.
How would you describe the performance of the Brisbane office market since the January 2011 floods?
If you're talking specifically about the office market, then statistically you'd have to say that the floods haven't affected the take-up of office space at all, really. Net absorption this year is expected to be at record levels. The resource market is in part masking any of the issues that we had from the floods because Santos let their financial investment decision on their LNG project in January at the same time that we had the floods. Since then, themselves and QGC have continued to expand rapidly, and a number of contracts have been let with those projects, which have meant that there's a huge amount of net absorption in office space just through the mining and resource sector alone. The floods, again, it's a confidence thing. If you took the resource market out of Brisbane, there'd be a lot of tenants that would paint a pretty sorry story, and Queensland isn't expecting any growth this year. But in 2012, we're expecting a huge rebound in GDP. And between 2012 and 2015, we're expecting that Queensland will have the highest rate of GDP nationally. So the floods were something that have obviously affected people's lives very much personally, but from a business sense, things moved on very quickly. Some of the buildings in Brisbane were out of action for 4 weeks plus, but the prime buildings, the AIM premium grade buildings, were all back on within a couple of weeks maximum. And most of those tenants that couldn't get into those buildings were able to find some short-term holdover space elsewhere. So business was still continuing.
How are the current economic conditions affecting tenant confidence?
Economically, there's been a number of things which are having a potential impact on the office market. We've got uncertainty at a state level at the moment with talk that there might be a change of premier in the short term, and then I think we're all expecting a change of government when the election's called early next year. There's just a number of things that are happening which are making big decisions difficult for business at the moment. I think we're going to see that for at least the next 12 months. Again, the mining sector in Queensland is masking a lot of that uncertainty, and it's assisting in creating opportunity for people. And we're very lucky to have that. The one thing that is clear is that Brisbane is going to have a lack of new supply within 18 months to 2 years. And on the back of record net absorption in 2011 and 2012, the situation is going to get critical. So that creates a huge amount of opportunity for developers that have got long-term confidence in Brisbane, that have got a balance sheet and they've got serious access to capital. And I think the penny's starting to drop now with a number of these groups, that if they have some, even in small part, appetite for risk, it's likely to pay dividends in the years to come. So the next couple of years is going to be very interesting. You've got different forces pulling in different directions, but you've got excellent fundamentals in Brisbane. As the Brisbane market continues to mature, are tenants' requirements changing?
Look, I think tenants' expectations are certainly changing. With the addition of a number of resource-based companies entering the Brisbane market, no longer are they prepared to accept, stock standard B-grade product. Things like bike racks and showers are now just expected on an inspection. Tenants are asking, where are the showers, where are the lockers, and what is your neighbour's rating, as opposed to 2 or 3 years ago, where it was, is there any plans, or have you got any plans to put showers or lockers into a building? Another trend that we're seeing in the Brisbane market is tenant-led requirements that are really looking to design a building from the inside out. Evident that is the latest Suncorp brief, where they've come to the market, as we all know, for 30,000 square metres, but they're not prepared to accept a stock standard building that a developer or a potential fund has there ready to go. I mean, they really want to be involved in designing the product and put their own stamp on it.
What are the forecast market conditions for Brisbane long term?
I think Brisbane long term's got a pretty good story to sell to the rest of the country. If you look at this year's net absorption figures, CBRE research is forecasting just over 70,000 metres, which I think will surprise a lot of people watching this today. If you look at our forecast conditions for 2012, our research team's forecasting close to 78,000 square metres of net absorption. Then moving through to 2013 and 2014, what's surprising is we're dropping right back, forecasting 31,000 and 21,000 respectively. Now that's purely a process of limited supply coming into the market at that time. But if our guys have got it right, 2012 is going to be a very active year for the Brisbane office market.
Additional information on the Queensland market can be found on our website, cbre.com.au. I trust you enjoyed today's presentation. Thank you.